So now you might wonder, but remember, there's $280 trillion of store value that some of these aren't great stores of value. I mean, I know people like to buy art, but it's historically not a great store of value. So if you turn to slide 30, let's talk a little bit more short term. And there's George Gilder, who was a technologist in the 2000s, talked about this idea of networks are square the number of users. And MIT professor Metcalf essentially proved that out, that network value explains social media companies and commerce companies. And we tried to apply that concept to Bitcoin. And we said, look, if we took the number of unique addresses as a proxy for users and transaction activity per account, that two-variable regression explained 93% of the move in Bitcoin since 2013. So Bitcoin isn't a bubble. It's just risen because more people are creating wallets and using it. And that's why Bitcoin's going up. And so we just do some projections here in 31 that if you look at unique addresses, it almost tripled from August to December. But if it goes up another 50%, that's our projection. And if value activity per wallet rises another 10%, that gets you to, I'm sorry, it's not in here, roughly $18,000 by the middle of the year. So I think Bitcoin from today is roughly a double. Now slide 33 is trying to put some context about the recent sell-off in Bitcoin, because Bitcoin is down almost 43% since the December highs, and I think if this was an equity, people would be downgrading Bitcoin here, already down 40%. But what I've done is I've actually plotted Bitcoin's price since 2016 to now, and I've plotted the rallies and the sell-offs. Okay, and what's interesting is since 2016, Bitcoin's had 6 declines of more than 25%. And they've been followed by subsequent rallies. But let's put some of these in perspective. So that's on page 34. That when you look at the Bitcoin declines, they average 24 days. That's that number here, 24 days. And most people think of declines as percent from the highs. At JP Morgan, I published a study on bear markets, which essentially we argued that if you look at the last 100 years, bear markets are not declines from a peak, it's a retracement of the prior advance. I mean, it's a logical concept. So what we did was highlight on the right what decline, or how much of the prior advance was given up in each of the declines. And you can see that it's actually a pretty narrow set of numbers. It's somewhere between 60 to 70%. In other words, every Bitcoin decline has been essentially a 60 to 7% retracement of the prior advance. Well, if we were to say, what does that imply for Bitcoin's price today? That implies that the Bitcoin low will be roughly 9,000. And we're at 10,000 now. So I think we're very close to a bottom. But then the average rally is a 150% move over the next 3 months from that level. So again, if we were to think about that today, that implies Bitcoin would be close to $25,000 by the spring. So I think you'd want to be buying this pullback all day.